I guess it's not something crazy, unique first time around, but this is an extreme like we haven't seen in a long, long time.
That's correct.
But I'm trying not to get frustrated over it. Just trying to, focus on.
Then I took one more caller. We got Texas. I got Anthony. Anthony in Texas. Hey, Anthony.
Hey, question about volatility. I saw a segment where they went over the definition of volatility and kind of made a realization. Volatility is at all-time low, and one of the numbers that they look at to calculate it is the risk-free rate of the Treasury bill. And since interest rates are at all-time lows, is there a correlation with that? Because if interest rates stay low indefinitely, won't volatility continue to just shrink and shrink? It's just unbelievable that it's 12, 11, and looking at the formula, it seems like it's highly correlated with this risk-free rate, which I don't really understand, but I guess it's the interest rate of
the risk-free rate essentially says how much is somebody willing to pay me not to take risk, and then every single notch up from there, there's a measure of risk relative to potential return until you get to stocks, which may be 3.5% above risk-free rate. But you're right, with low volatility, with low interest rates, you essentially take one of the variables out of the volatility calculation. So you're exactly right when you say with low volatility, there's less calculation going on. There's less variables, less subjectivity, less calculation, and therefore wouldn't that be another factor in keeping volatility low? And I don't think there's any question about that. That's what you're seeing. The problem with this, Anthony, is that at what point where's low when it comes to just risk in general? Like what do we consider everyday risk for taking for participating in a not in a cheap market? So that's what the marketplace has to determine. What's the balance what's the trade-off between price extreme and low interest rates? And what's the expectation for higher interest rates and more price volatility? And so with volatility, you end up getting, or more price movement. So with that volatility number, essentially at some point, it can't go to zero. We know that. But where can it go to? And if anybody can figure it out, that's the billion-dollar question, is when do things move? If interest rates don't move till 2016 or 2017, you've got a situation on your hands where volatility could stay ridiculously low for another 2 years. If interest rates start moving in Q4 of this year, you've got a situation where volatility is way too low right now relative to where it may be trading by the end of the year.
Yeah, and it could go way up. One other thing about the volatility, did you hear about this recalculation where they're going to use weeklies in the VIX? And I'm wondering, the weekly, they started with that VSXT, which is like at 10. I'm thinking that if they recalculate it using weekly, it's going to be even lower than what it is now. Have you heard about that?
Yeah, we have. And that's again.
We actually have TP looking into it.
Yeah.
He'll have something for us on Thursday.
That's a double-edged sword. That's going to work both ways. And again, I would caution you to reading too much into that, because the assumption you're making right now is that weekly is going to further stabilize the market and attract new sellers. And you know what? It works the exact opposite too. That creates a lot more panic in the near term if the market goes the other way. So I would be very careful about trying to come to a conclusion. Again, it's all about price extreme, and there's a lot of open variables now, like interest rates. Here, the argument that I've made very public on this is you've got volatility nearing all-time lows, and you've got interest rates at all-time lows. When interest rates are at zero, they're not going any lower. And when volatility gets to 10 or 11 or whatever it is, it's not going any lower. We got to wake up in the morning. I mean, there's a risk of, falling in the bathtub type of thing. You can't have zero volatility. So if you start to look at risk reward here, man, what's in it? You're just hoping for time to go by. Mm-hmm. That's a very tough trade.
Yeah, no, I hear you. But, you say interest can't go to zero, but didn't it go negative somewhere in Europe? Aren't they charging you interest for keeping your money at the bank? And
It's gone negative.
So,
It's gone negative in a couple places, but number one, we really haven't seen that here other than in panic situations. And number two, I mean, you don't really think that's sustainable, do you?
I can't fathom that, but if they get desperate, where interest rates have been 0 to 0.25, it kind of feels like Japan was in the 90s, and they could, I would like to think that we would never go negative. That it's unthinkable.
But if you remember, Japan's stock market volatility did not stay. It was pretty. The Japanese stock market moved all around. I mean, you were talking about 30, 40, 50% moves. From 15,000 down to 8,000, back to 15,000. So the markets were moving. Just interest rates were low. This is not Japan.
Well, yeah. I hope not.
That's the bet. That's the bet we're making.
That's the bet. If you're going to make a bet, I don't like making that bet. Let's put it that way.
You don't like the other side.
I don't like the other side.
Okay, well, I look forward to hearing TP's analysis because I'm mainly a volatility trader, and I'm kind of interested to see what those weeklies will do with that VIX, because VIX is the very, I try to understand it, and it's as complicated as it is, but I'm looking at long-term trends, and
it's scary.
Interesting. Yeah.
Scary looking.
Okay.
Thanks.
Thanks so much for your time. Good call.
They're totally fair questions. We have no idea.
No,
but it wouldn't surprise me. They're thinking the way everybody's thinking.
Yes.
Okay. There were 17 sportscasters in Chicago between the Tribune, the Sun-Times.
Hometown sportscasters and countrywide, yes.
17-0. Well, between USA Today and the two Chicago papers, 17-0 had the Bears winning. Okay. I don't buy all this crap for 1 second that just because we're introducing a short-term volatility index that means more pressure. In fact, when that thing turns around, it's going to be more the other way. If anybody trades it.
Right.
Coming up next, it's